Hello friends, welcome to another video. In this video, I will talk about support and resistance zones, and I will try to explain what are the support and resistance zones and what is the logic behind why they work so well in any financial market. Secondly, I will talk about how we can identify these support and resistance zones on any chart. Third, I will talk about how we can draw these support and resistance zones. And fourth, I will talk about how we can trade these support and resistance zones. So we are going to start with the first topic, which is what are the support and resistance zones. So now we all know that the price in any financial market moves when there is a imbalance between the buying and the selling pressure. So let's take an example. Suppose we have more selling pressure at a particular price point in any financial market than the buying pressure. So what's going to happen as we have more selling pressure in the market? So all pending buying orders are going to get filled, and the time will come when there'll be no more buyers left in the market to buy the asset at that particular price point. Now, still, if we take an example here on this particular chart, as you can see, this is a supply zone, historical supply zone, and right now the price is making higher high and higher low. And once the price hit the supply zone, as we can see, this is a supply zone where we have the more supply than the demand. Before we had the demand and the price was rising higher. Once the price hit this supply zone, all the pending buying orders got filled, and eventually a time came when there were no more buyers left in the market at that particular price point. So what happened? We still had sellers there who wanted to sell their asset, but because there were no more buyers left in the market, so they started selling their asset at the lower prices. In that situation, the price fell lower, and once the price started falling down, more and more sellers joined them in order to miss the opportunity of selling their asset at the higher prices. Now the price is falling further, and as we can see, this was a supply zone before, but once the price broke and closed above, this supply zone turned into a demand zone. This was the demand zone. This was the demand zone. So now the price is falling down until we have a price point where we have more demand of the asset than the supply zone. Now these two are the demand zone, but they were not. You can say the demand is not enough to handle the supply here. So in that situation, the price fell further and hit the next demand zone after this one, which is here. So once the price hit this demand zone, here we have the more buyers than the than the sellers, or you can see here we have the more demand than the selling pressure. So eventually, what happened? All the pending selling orders got filled, and eventually a time came when there were no sellers left in the market at this particular point. So at that time, there were still some buyers who wanted to buy the asset, but now because there were no sellers, so they were unable to buy at this particular price point. So what they did, they started buying at the higher prices, and once they started buying at the higher prices, the price pushed higher. In that situation, more and more buyers joined them because they also didn't want to miss the opportunity of buying at the low price. Now, as we can see, the price pushed higher. So what happened here? The price was falling down. Eventually, the price hit a demand zone, and the price bounced from the demand zone. So we can say this demand zone acted as a support to the falling price, and that's why we call these buying zones or demand zone as the support zones as well. Now we have more demand of this asset, more buying pressure, and the price keep on pushing higher until we hit a supply zone where we have more supply of this asset than the demand. So what happened exactly? This was a demand before, but once the price broke and closed below, this demand zone turned into a supply zone. So now we have more supply of this asset, and price keep on pushing higher until the price hit the supply zone. Once the price hit the supply zone, all the pending buying orders got filled, and the time came when there were no more buyers left in the market at this particular price point. But still we had the supply. Still there were some sellers who wanted to sell, but there were no buyers, so they were unable to sell. So what exactly happened? They started selling at the lower prices, so which made the price fell further down. Now, what happened here exactly? The price was rising higher, and once the price hit the supply zone, it reversed its direction and started falling down. So we can say that the supply zones acted as a resistance to the rising prices. So that is why we call these seller zones or supply zones as the resistance zones as well. Now we have more supply of this asset and the price keep on falling further down. Now as we can see, the price made a lower low. The price was making here a higher high, higher low, but once here the price made a lower low and lower high. So eventually this demand zone have to be broken and the price fell further until it hit another demand zone, which is here. Now as you can see historically also, this zone has been retested multiple times as well. So this was a demand zone. Price kept on falling further until it hit a demand zone where we have the more demand of this asset than the supply. So a time came when all the pending selling orders got filled and there were no more sellers left in the market. So eventually, there were still some buyers who wanted to buy, but they were unable to buy as there were no sellers. So they started buying at the higher prices and took the price higher until the price hit a supply zone. Now we know that this was a demand zone, but when the price broke through below this demand zone or the buying zone, turned into a supply zone resistance. Now once the price in the supply zone, again the same process, same procedure happened. There were like all the pending buying orders got filled. There were no buyers left in the market and the excess sellers who wanted to sell their asset pushed the price lower. So now we can see this process will keep on repeating. So we know now that the price keep on bouncing between support and resistance zones. So that is the logic behind why this support and resistance zones work so well in the market. So now in the next section we will talk about how we can identify the support and resistance zones and how we can do them, and further we will talk about how we can trade these support and resistance zones. So in this section we will learn how we can identify the support and resistance zones in the market. Now to identify the support and resistance zones in the market, first of all we need to identify the trend of the market, the direction of the market. Now in this case, as you can see, the price is making low, lower, high, low, low, lower, high, lower, low, and we just of the previous high. So as we can see, the price is making lower lows and lower highs. So we are in a downtrend in this market. Now, in order to identify the support zone, we will look down and left from the current price to identify the recent support zone. And what do I mean by the recent support zone? So a recent support zone or the zone which acted as a support recently. So in order to identify the support zone, we will identify the recent support zone from the current price. If we see this is going to be our current price, and if we look down and left, this is going to be the lower low of this downtrend, and if this downtrend has to continue, this support is to be broken. So we are not going to consider this one as a recent support zone. So if we look down and left from here, we can see that this one is a zone which can be considered as a recent support zone, or you can see the zone which acted as a support recently, as you can see the big bounce from here. Now the second step in identifying the support zone is that we have to check if the recent support zone has been retested multiple times in the past or not. So if we see this one, we try to identify if this zone has been retested multiple times or not, that we can see. So this zone has been retested multiple times in the past. Yes, it has been retested multiple times. So we can consider this recent support zone as a support zone which we can focus on for finding the opportunity in the future. So that is how we can identify our support zone. In the same way, we will look up and left from our current price in order to identify the recent resistance zone, or you can say the zone which acted as a resistance in the recent time. So from this is our current price, and if we look up and left, we find this one is going to be our recent resistance zone. As you can see, the price got rejected from here recently. And the second condition, that if this zone has been retested multiple times or not, and we can see that we can mark this one. So we can see this one has been retested multiple times as well, here, and a couple of times here as well. So yes, this zone has been retested multiple times. It's a very strong resistance zone, which we can consider for looking trading opportunities in the future. Now I'm talking about these two recent support and recent resistance zones. Why? Because the recent support is going to be the zone which price is most likely to hit next if it continues lower, right? This is going to be the zone which price is most likely to hit next if it continues lower. And in the same way, the resistance zone, the recent resistance zone, is going to be the zone which price is most likely to hit if it continues higher. That's why I focus on these two zones only. Although you can identify and draw more than one support zones below the current price and more than one resistance zone above the current price. Like in this case, if you want to identify the next resistance zone, we can check from the recent resistance zone, look up and left. This is going to be the next recent resistance zone, and as you can see, this has been retested multiple times in the past as well. So this can be considered a resistance zone as well. Once this zone is broken, the price is most likely to hit this zone as the next resistance. Same for the support. If next to this zone, if we look down and left, we can see that this zone acted as a support in the past. So this can be considered as a support zone because we can see that this zone has been retested multiple times as well in the past. So yes, if this zone is broken, the price is most likely to hit this zone as the support zone. So although I like to draw myself only one support and one resistance zone, because although myself like to identify and draw only most recent support and resistance zone, because these are the two zones which the price is most likely to hit next depending upon the direction it moves. In the next section, I will explain how we can draw the support and resistance zones. So now in this section, we know that and we learn that how we can identify the support and resistance zones. And so now let's talk about how we can draw the support and resistance zones. Now to draw the support and resistance zones, what we're going to do, we will come to the recent retest of the support zone. This is going to be our support zone. So I will come to the recent retest. This is the recent retest from the current price. As we can see, our current price is here, and so recent retest is this one. So if we come to the recent retest, then what I will do, I will mark a line on the recent body close, which is the lowest body close. The lowest body close of the recent retest is this one. What I will do then, I will mark a line above, considering the lowest body close as the median. I will mark one line above and one line below the median, which is the lowest body close. So this is my zone, this is my support zone, and then I will make a cross check that if this zone accommodates most of the historical retest in this zone or not. Now as you can see, this zone is accommodating most of the historical retest. Now sometimes in order to accommodate the historical retest, we need to move our zone, our lines a little bit above or below. So that can be a little bit adjustment that we have to do if required. Like in this case, if required, we can move our line a little bit high and low and make the zone a little bit bigger depending upon like how we can accommodate. The same way, if we talk about the resistance zone, we will consider the highest body close of this resistance as our median, and then I will mark one line below and one line above this highest body close of this resistance zone. So then I will make a cross check to ensure that it has accommodated most of our historical retest in this zone. As you can see, this is accommodated, this one. We accommodated this one, but this one is out of the zone kind of. So as we can see, this is able to accommodate most of the historical retest as well. So that is how I identify and then draw my support and resistance zones. And in the next section, I will talk about how we can trade these support and resistance zones. So now let's talk about how we are going to trade these support and resistance zones. Now, as we know that the market is moving in and out, as we know from here, it's a low, lower, high, lower, low, lower, high, lower, low, lower, high. Now, we know that the market is moving in a downtrend. So, if this downtrend continues, let's okay. So, as we can see, the price retested the previous high of this downtrend. So, if this downtrend has to continue, if this downtrend has to continue, the price most likely to break the previous low, and in that scenario the price will hit our support zone. So we are making a lower low and lower high, and the price most likely to break the recent low or the lower high of this downtrend, and the price will hit our support zone. So in that scenario, what we can look for, the price is in a downtrend, the market is in a downtrend, and if the price hit the support zone, so we have to look for some buying opportunity in this market. So although that will be a counter trend trade, the market is in a downtrend, right? And the price is hitting the support zone. So in the support zone, we can look only for buying trades. So once the price hit this zone, we can go to lower time frame H1 and minute 15 and look for some bullish momentum. We can look for some rejections. We can look for some double bottom patterns. We can look for some engulfing candlestick patterns. So these are the trading patterns and chart patterns that I trade. You might have your own rules to look for trading opportunity in such zones. But what I mean to say is that once the price hits the support zones, we can go to lower time frames and look for some buying opportunity in this market. Although that will be considered as a counter trend trade because the market is in a downtrend and we are looking for uptrend trades, or you can say we are looking for bullish trades. Although we will keep our target low because the market is in a downtrend and the downtrend might continue any time. So that will be a trading opportunity if the price continue lower. But what if the price continue higher? The price will just break and close above our resistance. As we can see, the price is making lower lows and lower highs right now. The price retested the recent high or the previous high of this downtrend. What if the price break and close above the previous high? In that situation, the price is most likely to hit our resistance, right? But in this scenario as well, because the price broke and closed above the previous resistance, so we are bullish now. And in that scenario, if the price hit this resistance, right? If the price hit this resistance, that will also be a counter trend trade because we are bullish now because we close above the previous resistance, and if we are hitting the resistance, we have to look for short trade in this resistance. That will be considered a counter trend trade as well. So in that situation, what we are going to do, once the price hits this zone, we are going to go to lower time frames H1 and minute 15, and we can look for some kind of bearish momentum, some kind of downward rejection, some kind of double top pattern, some kind of bearish engulfing candle in order to look for a shorting opportunity. And as I said, it will be a counter trend trade as well in this case because we are going upward now as we broke and close higher as like from the previous resistance. So that is how we can look for a trading opportunity in the market based on the support and resistance zone. Now in this case, if the price break and close below this support zone, then we can wait for a pullback into the recent broken zone and then look for some kind of rejections to the downside to look for continuation of this downtrend. That will be called as the trend continuation trade. And once the price hit this recent broken zone, we can go to lower time frames like 15 and look for double top bearish engulfing candle kind of patterns to look to go short. So that is how we can trade these support and resistance zones in any market. So in this video, guys, we learned what are the support and resistance zones, how we can identify support and resistance zones, how we can draw them, and how we can trade these support and resistance zones. And so I hope you enjoyed the video, and if you really did like the video, share the video and subscribe to the channel in order to support the channel and YouTube algorithm. Thank you very much. See you now.